Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. And today we're diving into Citius Oncology Inc.'s latest annual report. This isn't just another dry financial document, folks. We're talking about a company trying to make a big splash in the tough world of cancer treatment, and this report shows us exactly how they're doing or not doing after launching their main drug. Before we jump in, if you love getting clear, no-nonsense insights from these official documents, make sure you are subscribed. We pull back the curtain on companies big and small, and hey, we've got an amazing Discord community forming where we discuss these filings further. So check that link in the description. Let's cut right to the chase. This company is burning through cash. A lot of cash for the year ending the 30th of September 2025. They reported a net loss of almost $25 million. That's a big number, especially when you consider they had zero revenue. It shows they are still in the very early stages of trying to make their treatment, LYMPHIR, a commercial success. Now, you might ask, if they have no sales, why do they have over $22 million in inventory? Well, this inventory is for LYMPHIR, their cancer drug, which they just launched in December of 2025. This means they're producing the drug in anticipation of sales, which is a sign of confidence, but also a huge financial bet. If those sales don't materialize as planned, this inventory becomes a costly problem. Looking at their short-term debts, their accounts payable jumped significantly to over $13 million from just under $4 million the previous year. This means they owe more money to their suppliers than before. It's a common thing for companies ramping up production, but it also points to how much they rely on external parties and how crucial it is for them to manage their cash flow. And here is an interesting tidbit. They owe over $9 million to Citius Pharmaceuticals Inc. This is a related party, meaning Citius Pharma holds a significant stake in Citius Oncology and provides them with many services. Essentially, Citius Oncology is heavily reliant on Citius Pharma for financial and operational support. This close relationship, while perhaps necessary for survival, also raises questions about potential conflicts of interest and Citius Oncology's true independence. They spent over $8 million on stock-based compensation. This is essentially money they're paying their executives and staff in the form of stock options and awards. It's a way to attract talent and align their interests with shareholders, but it also dilutes existing shareholders since more shares are created. Their research and development spending increased to over $6 million. This is expected for a pharma company as they continue to develop their therapies. Even though LYMPHIR is approved, they are likely still investing in future indications or improvements. They have a license payable that's over $22 million. This is money they owe for the rights to use the LYMPHIR technology. It is a significant chunk of their liabilities, showing how expensive it is to acquire the rights to promising drugs. This is a big one. $73 million sitting in process research and development. This represents the value of the LYMPHIR technology they acquired. It is an intangible asset. Normally, companies would amortize this over time as they make sales, but for Citius Oncology, it's a massive number that highlights the financial gamble they've taken. Now, the auditors themselves raised a major red flag. Their independent auditors explicitly stated to raise substantial doubt about our ability to continue as a going concern. This is a serious warning. It means that based on their current financial situation and plans, they might not be able to survive for the next 12 months without significant additional funding. This is primarily because they are so dependent on Citius Pharma and external financing. The good news, if you can call it that, is they've been actively raising money. They brought in over $15 million from stock sales in July and September of 2025 alone. This shows investors are still willing to bet on them, but it also means more dilution for existing shareholders. Remember that going concern warning from the auditors. It's here in black and white. This isn't just a minor issue, it is fundamental to whether the company can even stay in business. They acknowledge this themselves. They need a lot more money, and Tree's absolutely no guarantee they'll get it, or get it on terms that don't cripple them further. This is the tightrope walk for many biotech startups. This sentence, buried in the risk section, really tells a story. They have one drug, LYMPHIR, which is now out in the market, but their entire strategy and the company itself are unproven. It's a high-stakes gamble. All their hopes rest on this one drug's success. They admit their market share estimates might be wrong. They estimate the US market for LYMPHIR to be over $400 million. That sounds big, but if their projections are off, or if competitors eat into that market share, they could fall far short of their revenue goals. This is a critical point about their relationship with Citius Pharma. Citius Pharma owns about 79% of Citius Oncology. That means Citius Pharma essentially controls the company. While this might provide financial backing, it also means decisions might be made to benefit Citius Pharma. First, not necessarily the minority shareholders of Citius Oncology. They are a smaller reporting company. This means they have fewer reporting obligations, which can make them seem less transparent to some investors. It's a double-edged sword, less cost for them, but potentially less information for us. And finally, for investors, the price of their stock is all over the place. This volatility is typical for companies in this situation, but it underlines the massive risk involved. You could see big gains, but you could also lose your entire investment very quickly. So, what is the bottom line here? Citius Oncology is in a very precarious position. They've got an approved drug, LYMPHIR, which is a huge step. But the financial reality is stark. They're burning cash, heavily reliant on their parent company, and facing significant doubts about their ability to continue operating. Their entire future hinges on the commercial success of LYMPHIR, and that's a massive gamble. While they've managed to secure funding and launch their drug, the path ahead is incredibly challenging. Investors need to be aware of the substantial risks involved, the dependence on external funding, and the potential conflicts of interest stemming from their relationship with Citius Pharma. Alright. That is our breakdown of Citius Oncology's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description to continue the conversation. Thanks for watching. See you next time.